So it's been almost a whole year since Trading 212 introduced interest on uninvested cash at a time when a lot of stockbrokers were giving absolutely nothing on your cash, and also at the time when high street banks were, increasing their interest rates very close, if not exceeding 5%. So in this video, I'm going to go through my experience using the Trading 212 interest on cash feature and, just go through how it has been over the past 10 months. Now, of course, if you would like to sign up to Trading 212 and receive a free fractional share worth up to £100, you can always click the link in the description box down below. If you've signed up less than 10 days ago and haven't received a free share, then if you go into the promo code section of the app and just type in JUBAIR, you should be able to get a free share. So anyway, Trading 212 about 10 months ago launched this feature where they were actually giving people interest on their uninvested cash. Like I said before that, if you had any cash on Trading 212, it would just sit there and lose its value to inflation. Previously, you'd had to be on something like, Free Trade or even Vanguard, which would give the tiniest amount of interest on your uninvested cash. On Free Trade, it was X amount, but it was capped at £10 a month. So if you had like £100,000, which I'll show you later, you'd only just get £10 and the cost of the account was £10. So you'd actually be, neither here nor there. So when Trading 212 first launched it, I believe off the top of my head, it was 2.15%, which they quickly changed to 2.25%. And then they doubled that to 4.5%. And then again, they raised it. There have been so many rate increases since then. And Trading 212, correct me if I'm wrong, they have been the highest paying, financial institution for interest on cash, whether that's in a cash ISA or within a general investment account like I am doing here. As you can see, I am in the invest account right now. So currently I have a lot of cash. I get this question quite often. What is cash? What does that mean? If you're investing, how can you have cash? So essentially cash is just the, when you deposit money into Trading 212, it comes as cash and then it allows you to buy into investments. For example, you can see some of my investments here, for example, in Amazon, Lloyd's, Rolls-Royce, PayPal. So when I invest, my cash is then spent into getting shares in return of my cash. However, if I decide to, sell my investments, then that will come up as cash. Cash is basically liquid. Currently, you can see I have £19,971 in cash. So if I wanted to withdraw that, it can go back into my bank account. Cash is cash. Everyone knows what cash is. So anyway, you can see there are two figures here. What I earned in interest on my uninvested cash throughout the last month, and then the all-time I've earned. So in the past 365 days, I've made £320 in just interest alone. Of course, I am not a tax advisor, but depending on your circumstance, you will have to pay tax on this, although you do normally get a £1,000 personal savings allowance. So if you earn past a certain amount, this allowance can be taken away from you. So definitely contact someone like an accountant if you want to learn more about that. But currently the rate sits at 5.17%. As you can see here, this is an annual equivalent rate. If you want to find out more about what that means, you could always, download the app and go into the information button here and you can read up on that. And if you really want to, you can go on their website and they will show you the formula they use to calculate AER, which is not as simple as basic calculations that you might make, 0.0517 times X amount. So 5.17% is significantly higher than the central rate that is 4.75%. That is the Bank of England's central rate. This means that Trading 212 is providing a much higher rate than pretty much any high street bank account because of course they rely on this central rate and they will never give you 4.75% because it costs money to actually provide you with cash. They will skim a bit off that 4.75% for profit and administration and stuff like that. So as you can see on £19,971, that is a daily interest payment of £2.75. If I go into the payment section over here, you can see my payments that have been made every single day. That's the big difference between, high street banks and Trading 212. First of all, there is no limit to how much you can put into your Trading 212 invest account. So if you had £1 million, you'll be earning that interest rate on £1 million. It is easy access. There's no limitations to how much you can withdraw. If you want to withdraw, let's say £10 every single day, I don't see why that would be an issue. Also, the minimum is just £1. Certain bank accounts might provide a higher rate, but you know, the minimums might be £10,000 or £1,000 or whatever they want. So there's absolutely no minimums, no maximums, and it is easy access, unlimited easy access. So there's no limit on how many times you can withdraw. Pretty much incredibly hard to beat trading 212 at the moment. If I go into the payment section over here, you can see each time that I was paid. Like I said, it is a daily payment. Yesterday was £2.76. The day before it was 13p. And you can see this changes throughout, you know, for me throughout the days and months, because what I'm doing is I'm investing my money and then maybe selling off my shares and then investing again. Having cash for me is therefore very important, and getting that 5.17% on that uninvested cash makes it even better. And I'm not just losing out to inflation whenever I've sold out of my stocks. Now, like I said, interest on uninvested cash is also available in the stocks ISA, and then we'll come back to the cash ISA in the end because it is slightly different. Now you can see this is my stocks ISA with Trading 212, and I currently have £105,414 in uninvested cash. Something I can't recommend anyone to hold this amount of cash, but I am doing it for a reason. I do have investments outside of Trading 212, but anyway, I'm getting 5.17% even on £105,414, and that is a daily interest payment of £14.55. If I go into payments, you can see I've been paid out every single day too, varying amounts because I'm investing here and there, and the amount of cash that I have is going to be lower at certain days and higher in others. In any case, you can see yesterday I was paid £11.76, the day before that I was paid £13.16, and then the day before £13.16, and you can see how it changes over the time. The highest I've received was around £14.58. I had a lot more cash then, and it just goes to show that these daily payments are really adding up. You can see over the past 10 months I've made £949 from this interest on uninvested cash. Of course, throughout the entire period I wasn't just holding cash, so this was only when I was holding cash can I get, you know, interest on uninvested cash. The best part about this is you get paid daily, so even if you keep £100,000 for one day, you are going to get that £14 and X amount, which is one of the best things in my opinion about this whole thing. Now let's talk about the catch, because of course not everything can be rainbows and roses. Now the biggest catch to this is that the majority of your money is put into qualifying money market funds. Even though I do say this is a catch, I do have to say that qualifying money market funds are incredibly safe generally. These securities are usually government bonds, short-term government bonds, and other high credit rated, you know, debt. And the chances of, you know, losing a lot of money through qualifying money market funds is still low, but the chance is not zero. Now, I would highly recommend, if you want to be doing this, to go into the frequently asked questions section of Trading 212 and go through each tab. That will explain a whole lot more about these qualifying money market funds. It even explains what uninvested cash is, so if I haven't explained it properly for whatever reason, this will probably explain it better, and it will explain what qualifying money market funds are. Now, in addition to qualifying money market funds, some of your money might be in high quality banks such as JP Morgan, Barclays, and NatWest. But when you opt in for this higher rate of interest, you do have to realize that there is that risk. If something does happen, then you might not get back all the money that you thought you would have. So do definitely do that only if you are willing to take on these risks. And like I said, you can also earn that rate of interest in your cash ISA. Now, I haven't set up my cash ISA with Trading 212 because I have that money in my Trading 212 stocks ISA. There's no point for me. I don't see a point of having the cash ISA, but you can see it is exactly the same rate at 5.17%. If you're worried about the risk that I just talked about before, you can put your money here and they will not be in qualifying money market funds, and your funds here will be as secure as they would be in any other high street bank, for example NatWest, JP Morgan, and Barclays. However, there is a catch to this too. You can only earn interest on your cash. You can't actually buy stocks and shares within a cash ISA, but I guess for a lot of people that might not even be a catch. So make sure to check out some of my other videos, and I'll see you in the next video.